So if the top business level KPIs are net profit, return on capital employed and cash flow, then what does this mean for the supply chain? What should the top level metrics of a supply chain be so that we know we are contributing to the overall success of the business? Well, let's take net profit. That is revenue minus costs. So what can we do in the supply chain to maximize revenue and minimize costs? Revenue is getting paid by customers, who could be end customers or other businesses. They pay us when we deliver what they bought. So the more orders we can deliver to paying customers, that's good. We need to be recording a measure of delivery, which is an output of the supply chain. Maybe the number of deliveries or items or dollars of goods delivered per day or per week. Maximizing revenue also means customers being happy and buying again. What makes happy customers? On-time deliveries without mistakes or delivering even faster than on time. So, we will want to record our customer satisfaction and the things that contribute to that, like delivery times and customer mistakes, etc. Common metrics here might be the on-time in full OTIF percentage and the customer lead time. Whilst maximizing revenue, we also need to be minimizing costs incurred by the supply chain operations and tracking costs over time. Cost drivers vary hugely by company, but make sure you have some overall measure of total costs and know to some level of detail how they break down and which are the biggest. Probably it's labour, transportation, fuel, packaging materials, maybe some damaged goods. Having a good overall picture and the ability to identify and focus on priorities is a fundamental of all performance management, not just with costs. The second of those big, high-level business KPIs was the return on capital employed, or return on investment. This accounts for not only profit, which we've just talked about, but looks at it in comparison to the money tied up in the business, the capital employed. This is different from costs. Capital employed includes inventory waiting or moving through the business. It includes equipment, buildings, and other assets we spent money on. A lot of this capital employed will be fundamental for the business and supply chain to function. We need buildings, equipment, and inventory, but we still want to minimize it whilst maximizing profit. For the supply chain, this capital employed or investment really means we have to focus on how much inventory we have and things like the size of our fleet of trucks or the number of super AI controlled warehouse robots. Inventory is the major theme, however. Think about a food supermarket and their inventory. They have thousands of items available to buy on the shelf, and customers expect basically every item to be available all the time. Supermarkets are the masters of the balancing act of having enough inventory in stock so that a customer can have what they want when they want it, whilst only having a few days' worth of stock on the shelves and a few more in their warehouses. Inventory is expensive. The money is tied up from when we buy it, and we want to minimize the time until we get it back, the money back, by selling it. So it's no good for the supermarket to have years' worth of stuff on their shelves, aside from the fact that inventory is very expensive to hold and unsold food goes off, which is a waste and then part of the costs that we want to minimize. This links right on to cash flow, minimizing the time from when we spend our money to when we get it back. The supply chain and its effectiveness has a huge role in this. It means moving goods faster from when we buy the items from suppliers to selling them to customers. But not just the moving. Moving might be a very small part of the time. It also includes the waiting time in your warehouses, shop shelf, or your raw materials waiting area. More time inventory is waiting in warehouses means having more inventory, which we've just mentioned, also causes higher holding costs and therefore increases the costs and reduces our profits. Inventory is a type of capital employed, and so it affects our return on capital employed. And now, having more inventory also slows down our cash flow. So, managing the quantity and flow of inventory is a pretty major theme. Top supply chain cash flow related metrics would therefore include inventory turns, customer lead times, delivery times, and more on the purchasing and accounts side, things like credit and payment terms. In this course, we're going to look at a lot of supply chain KPIs. For each one of them, or for each of your existing KPIs or the ones you are brainstorming, think how they relate to the overall financial success of the business. How do they help understand your impact on net profit, return on capital employed, and cash flow? Specifically, maximizing revenue, the quantity of deliveries to customers and their satisfaction, minimizing costs, keeping control of invested money, the capital employed, the quantity of inventory, and minimizing the time from your supply chain spending money to getting paid.